To keep you updated on the capital and financial markets, here is a recap of what happened.
A former chief executive officer of an investment company was charged again in the Sessions Court here on the 26th of February, this time with 2 counts of transferring 116 million ringgit to a company conducting capital market activities without a license. He pleaded not guilty to both charges. As then CEO of Infinity Trustee Berhad, he is alleged to have transferred a total of 116,292,904.15 ringgit from the company's FIMM Bank and Alliance Bank Berhad current accounts to Pixelvest SDN BHD's CIMB current account. This was to further Pixelvest's activity of conducting a fund management business, although Pixelvest did not hold a capital market services license and was not registered. India's securities regulator is proposing to relax some rules for mutual funds to make it easier for fund companies to operate their business. They include allowing one manager to be appointed for both domestic and overseas commodity funds instead of the current requirement for dedicated fund managers for each, and relaxing a rule that bars mutual funds from investing more than 25% in related companies. The Securities and Exchange Board of India unveiled the proposals on the 22nd of February in a consultation paper headlined as Ease of Doing Business Initiatives for Mutual Funds. The regulator is seeking public feedback on the proposals until the 15th of March. Association of Mutual Funds in India has written to mutual fund houses to take measures to protect the interest of investors of small and mid-cap schemes, which have seen heavy inflows in the recent past. Small and mid-cap funds have seen a surge in inflows from investors led by higher-than-expected performance of companies in these segments. Many analysts have raised concerns over the valuation of small and mid-cap stocks, which poses risks for investors. In the context of froth building up in the small and mid-cap segments of the market and the continuing flows in the small and mid-cap schemes of mutual funds, trustees, in consultation with the Unit Holder Protection Committee of the AMCs, shall ensure that a policy is put in place to protect the interest of all investors, AMFI wrote to its members in a letter written on the 27th of February. India's market regulator has asked money managers to consider restricting one-off investments from clients in small and mid-cap stock mutual funds and cut commissions offered for their sale, 2 sources with direct knowledge of the matter said. The Securities and Exchange Board of India communicated this to the money managers in a meeting earlier this month, the sources, who included a regulatory official, said. The regulator did not specify the quantum of flows it wants restricted, they said. SEBI's communication shows heightened regulatory concern on the surging inflows into Indian small and mid-cap mutual funds and any potential ripple effects on the financial system if investors suddenly started to yank their money from them. BNP Paribas Asset Management says ESG clients have been piling into money market funds, drawn by the allure of stable returns in cash-like instruments. There's lots of cash to move around and clients are reacting to the volatility of the market in general, said Thibaut Marlin, an investment specialist at the fund management arm of Europe's biggest bank. The development coincides with an historic retreat from the more traditional ESG fund market, which has been plagued by lackluster returns. Combined with the uncertain outlook for global interest rates, ESG investors have been allocating an ever larger chunk of their money to low volatility, highly liquid funds.
The latest e-Zine is now available for download at FIMM's official website. Download your copy today to keep up to date with what's going on in the industry. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.